Hi, Alan Henderson, Director at Erskine Owen. Recently we've launched our capital fund, which is designed to support our property syndications and property funds, and it does that in a number of ways. Lending funds on a short-term basis, providing deposit money and underwrites. So I just want to talk through specifically what those things are for, and also some of the risks. As we've been talking to people in the last few weeks, people have asked us, well, what is the risk of this fund? 10%, is it a lot riskier? What is the risk profile? So just to give you an idea of the nature, first of all, of the type of activities the capital fund will undertake. So some short-term lending. So a good example of that is at the moment we've got a tenant in one of our warehouses and they're up for a renewal of their lease term. They've got a 2-year lease renewal as part of their current contract, but they want to stay for a further 8 years if in return we undertake some works on the building for about 400k. And so that's a win-win for us. The rent goes up, we do those works, and it increases the value of the building. So if they go ahead and sign that and we agree, then they'll be wanting us to go ahead with that activity as soon as possible. So that means paying the deposit to the contractor who's already quoted and getting on with that work quickly. In the meantime, we'll go back to the bank and borrow those funds or raise funds from partners. But in the short term, we need to have those funds to be able to get going. So there could be a couple of $100,000 that we need to get the syndicate so it can get on with those works. So that's just one example. So what's good about that is that I guess if you think about a normal finance company lending out to property type activities, it could often be a developer, and where the lender doesn't know or doesn't have control over the activities of that borrower. So property developer borrows and the lender needs to make sure that the LVR is at a good level and that the cash flows are managed. In this instance, Erskine Owen is also, as the GP of the syndicates, is also in control of the borrower, so to speak. So I guess that's where it's quite different. Another activity that the fund might undertake is providing an underwrite to a new property fund. So an underwrite is where, when we're raising equity, if we get to settlement date and there's some equity yet to be subscribed, then the underwriter will step in and provide that gap, and in return they get a fee. So a standard fee for an underwriter is about 3%, so that's another way. So, and then the question is, well, what are the risks? One example of a risk, and it's always important to talk about them and to think through what I call the train wreck scenarios might be. One of those instances might be perhaps we lend to a syndicate, one of the examples I've given, and then they lose a tenant, and they lose a significant tenant. It could be that it's a single property syndicate and they lose a tenant, and then they've got no cash flow, so they've got to stop paying the interest payments because they can't afford to pay it. What happens then? Well, ultimately what would happen is that if they can't replace the tenant in a reasonable time frame, then the bank's actually going to start to take action and want to see the property sold in order to recover their money. So if we're in a scenario where the lending is no greater than 50% on a property, and the property is, for example, it's $1 million property and the borrowing is 500k and the fund is lent $50,000, very simple scenario, then the property would be sold, and in that instance there should be more than sufficient funds to repay the bank and the capital fund. So that's probably one of the main risks. And then people have also asked about how do we get our money out. So this is not like a property fund where if you wanted to liquidate your investment, you would put your shares up for sale. In this instance, you would put in a redemption notice, a request to redeem your funds. So the first 12 months, you're committed for the first 12 months, and then after that, it's a 90-day notice period. I think the good thing about launching this fund at this time in the market is that I think that we're probably at the peak of the interest rate cycle, so things should ease from here on in, and so I think we're kicking this off at a good time in the cycle. We've already got good subscription, and if you'd like to see the IM, get in touch. Love to chat to you about it, and hope to talk to you soon.